So thanks for this opportunity to TIE Hyderabad for us to be here. What we are really talking about here is around going beyond ESG into impact investing. So what I'm going to do is, over the next couple of minutes, I'll just begin the discussion by giving you all a little bit of a perspective in terms of this whole concept of ESG and impact investing. And then we'll kind of put some pointed questions to the panelists who are the real practitioners in the space around this whole area of ESG and impact investing. As has been mentioned, ESG is something that most of you are familiar with. It's really a concept where fundamentally the whole idea is that you try to do as little harm as you can, one. Second is you try to essentially conduct your business in a very transparent and high quality manner and treat your employees and other stakeholders in as fair and equitable a manner as possible. So effectively, in some way, ESG is a significant risk mitigation related strategy. It is a strategy to ensure that you are But in a country like India, where the development requirements are so large, is it possible for us to go beyond ESG? Is it possible that instead of just thinking about not doing harm or treating our stakeholders well, is it possible for businesses, for-profit businesses, to actually create a positive impact in society? Can we think of organizations which can generate profits for their shareholders as well as create social impact by supporting people at the bottom of the pyramid? That is really what impact investing is all about. Impact investing is really investing in for-profit businesses which can generate financial returns for their shareholders as well as create distinct social/environmental impact for the larger society as a whole. This is something which is very critical, as I'm sure a lot of you will appreciate, for the country. We have a large base of low-income people. We have a large base of poor people. How is it that we are able to, or how is it that we will be able to create products and solutions for some of these people? And that's really what impact investing is working towards. This is a very new idea. This is a very new concept. Historically, how do we think about philanthropy? How do we think about supporting people? And how do we think about investments? In our heads, investing is one block where you invest money, you make returns. Creating social impact, supporting people is not part of that equation. So impact is one part of the brain which really looks at what kind of returns can I generate, what risks am I carrying. The other part of our head tells us, hey, you know what, we are all privileged people, we need to support the underprivileged in this country, so we will do philanthropy and we will support people who need our money. What impact investing is trying to say is, can you combine these two? Can you create sustainable businesses which can also generate returns coupled with social impact? And that's a powerful concept that we are trying to establish here. That's a high-level idea of moving from ESG towards impact investing. We have here three of what I would call stalwart from the industry. And what we are going to do is really put some questions to them in terms of how is it that they are looking at this industry, what are some of the changes. Quickly, before I get into the questions, this is an industry which invests upwards of, you could say, $4 to $5 billion a year. The assets under management of this sector could be, you could say, about between $15 to $18 billion. Lots of the money that is invested in this sector in impact enterprises comes from international funds. And increasingly, we are seeing a lot of domestic funds as well as domestic LPs getting interested. So with that quick sort of a high-level introduction, I'm going to just quickly put together some questions which I will, sort of put. Anant here is from Willgrow. He looks at, it's an accelerator incubator, one of the leading ones, and looks at climate solutions. Meera is from the Shelter Fund, which looks at affordable housing. And Saurabh represents Caspian, one of the earliest impact investors in this country. So quickly, what I'd like to do is the first question, and I'd ask all of you to keep your answers pretty short, is really talk a bit about what are some of the areas where we are seeing investment opportunities in social impact. All of you know about microfinance. Microfinance was the grandfather of impact investing in this country. What I'm trying to ask everyone is, who are the fathers and who are the young children on the block? What are the kind of opportunities that impact investing can create? So maybe some quick questions and then we'll kind of get into the next round of questions. Over to you, Anand.
Thanks, Ramaraj, and that was a wonderful summary of ESG and impact investing. To answer your question very quickly, I think in a country like India, the opportunities for impact investing are immense. And to name areas, I would say probably three or four. Health, okay, because this is something which is needed by each and every citizen, and there are huge business opportunities in the health sector. Agriculture, the very old profession which huge number of our citizens are employed by, and there is huge opportunity in the agri sector, which some of the other panelists can speak about. Third is the overall area of the climate action, where you can see, a lot of new areas and green technologies emerging. And fourth is housing, which is again a very fundamental need, and I'm sure Meera will speak more about it. So all these are, incredible areas for impact investing. Yeah.
So our focus is mainly on housing. So I may be a little biased here when I start with saying housing offers a lot of opportunity. But beyond that, I have looked at other sectors where I see is we normally, to Ramaraj's point of, we don't look at investing and impact together, right? And even impact investment is a bit of stretch to look at and establish as a concept and to prove it gives return and it also gives impact. Added to that is looking at deeper technologies and strong technological solutions that could actually change the paradigm shift and create impact. One example, which is not so much technology now is things like a mobile phone, which has created a lot of impact if you actually look at it, right? Sort of democratizing things that were only accessible. So I think there is a lot of scope for deep technologies, which when brought in and with a bit of patient capital, which deep technology needs, can create a lot of sustainable impact for larger populations.
So before we let you go, Meera, and Saurabh, just maybe humor me for, why don't you give us a flavor, Meera, of one or two of the kind of companies that you guys are working with, which you see as creating very great potential. I mean, they may not have still reached that maturity, but can you give the audience a little bit of a flavor of what is the nature of these companies? And how is it that these companies will make a difference in the larger scheme of housing and housing-related technologies? Maybe one or two, maybe one example will, I think, give people a good flavor of what kind of organizations are we talking about.
Right. So one which is not, originally when it started, not a great technology, but they have built on is making better cook stoves, right? This is more in the African context, where it was wood-burning stoves, and they created a cook stove that was 70% better, as in, less smoke, uses less fuel, and to buy also it was costing like half as much. And they have sold like millions of cook stoves and, have been able to save so much carbon emission for the world. But if you go and ask every household, actually, when I was visiting, people were like, yes, I know that cook stove, right? And these were like,
And these are profitable, it's a
very profitable, yeah, right, from the ground. And they are, continuously improving, and now they have newer versions that have IoT and, a lot of improvements they are trying to make, right? So that's like innovation that has worked. It is not like rocket science. So in India, we are working with the 3D printing of homes, which can like totally change
3D printing of homes.
Wow. Right, so there is one home that we had also funded with a grant built in Chennai.
Right.
And this can totally shift the material you can use and the time it takes and all these factors and customization, right? Because you can precast things, but you will get all homes looking same, which is not how many people build, right? The plots are small, odd shaped, and so we think this will change the paradigm.
Got it. Saurabh, some flavor from you. You've been a veteran in the sector, right from microfinance, small finance banks, to now agriculture and some other. Some flavor of, how has been your experience in this space?
Yeah, thank you, Ramraj. And like you said, as we talk about the double bottom line, it is important for these businesses to be profitable and generate returns for the investors. But at the same time, there is an additionality in terms of how they are impacting the society and environment. And for the entrepreneurs in the company, that brings a level of interest from a completely different set of investors which may bring soft capital or which may bring interest into these companies, which otherwise would not have been possible. So, like you're rightly saying, the initial work on the impact investing was predominantly led by microfinance. And as we saw, microfinance becoming more and more mainstream, Reserve Bank of India giving out the small finance bank licenses to some of them. I think that sector is fairly matured now and delivered good returns to the discerning investors as well. At the same time, the sectors we see right now emerging is definitely agri, especially the upstream sector, which is quite interesting for me personally. When I came out of a college, and at that time, if we would have been asked to do a startup in the agri sector, I think neither me nor many of my colleagues would have considered it. But now I can see that lot of youngsters, lot of young talent going into the sector and coming up with some absolutely great ideas. A case in example, IIT-based promoters starting this company in Pune with initially with the help of Rabobank, and later on one of our Caspian funds supported them as well, where instead of using the diesel power generator or electricity-based water pumps, they actually use solar power-based water pumps, and then solar power-based chillers or coolers for storage of the crop after harvest. The company initially took its time to develop the product. It was a good gestation time. But once it started scaling up, the amount of soft capital available for it, government's Kusum scheme, etc., really helped them in scaling up multiple times. And now they are able to attract fairly mainstream capital at a multiples which any commercial investor would be proud of. So another sector which we are seeing doing very well is climate action. And climate, of course, is creating a lot of buzz these days, but also at the same time, the actual transition to efficient technologies or newer ideas requires fair amount of execution skills on the ground. And the good investment opportunities, again, are becoming available. We, again, and from Caspian's portfolio, have invested in a company which a lot of you would have heard about the older biogas plants in villages. And this company took that concept into an urban concept where they had a digester where if you are staying in a hotel like this, a lot of food waste gets generated. That food waste can be fed into the digester, creates gas which can be again used in the cooking into the canteen or in the kitchen. So an absolutely fabulous commercial product which also helps in the disposal of waste, and now becoming highly sought after companies by the development organization because of the work which they are doing. So some of these examples are, of course, from the sectors we are bullish about. We are also seeing interesting trends in education, a sector which went through a big digital transformation during the COVID period, but at the same time now offline is coming back in some ways, which kids going back to their schools, and interesting way in the sector is changing over a period of time. So these are some of the interesting sectors for future now.
Great. Sorry, Anant, I'll have to change some tack here. So I think, so that gives you a little bit of a flavor. So, this country is sort of, the way we see data at the Impact Investors Council, we at least, I would say, 7 to 8 of these kind of startups getting supported maybe on a weekly basis. So our deal flow shows at least 30 to 40 deals, out of which at least 60% are seed stage deals and maybe another 40% could be follow on. So it's a sector which is quite vibrant and across a big, sort of segment. One of the big challenges, however, is really, the availability of capital, which has obviously increased pretty substantially. Capital in this sector has grown by almost 30-35% on an annualized basis over the last 4 or 5 years. But it is still a small speck in the ocean. Commercial capital to some extent, yes, but impact capital is something we need far more. And this sector, again, I just at the pains of clarifying, everyone, when they think about this whole idea of impact, they are looking at this whole, sort of image of somebody deeply kind of poor who can't pay anything. Impact investing can't support that person. Those people need philanthropic grants. But there is a large base of low-income customers in this country. When I say low income, these are people who earn between 10 to 20,000 rupees on a monthly basis. It's a very, very large segment in this country. How is it that we can make products and services available for this segment is really what is the population. So I'm just going to go on to the next dimension of my questioning to some of these people is in terms of, how is it that more funding can be made available? Anant, you run an accelerator incubator. We all know that acceleration incubation in terms of social sector funding is one of the sectors which receives relatively the least funds. In my view, development sector funding should go a lot towards innovation, whereas actually it gets one of the lowest amounts of funding. Both of you run, sort of social impact funds. Some flavor from you as a country, how is it that we can increase funding for innovative social impact startups? Because that is really the need of the hour. We need to make money. We need to make organizations sustainable, at the same time create social impact. Some thoughts from all of you, given your experience, as to what could be some of the ways in which we can increase financing to this particular sector.
Shall I start? Yeah. Ramaraj, at the beginning, you rightly said that, typically in our minds, we compartmentalize, impact and commercial activity, and we feel impact is philanthropy-based and, commercial activity is something different. I think this barrier is the first and foremost which has to be removed. I think the best way to bring more capital into this sector, firstly, is to showcase that we are talking about market-based solutions through these social enterprises or through these impact startups, and these are commercially viable solutions. So then, the mindset of an investor can come in. The second part is to probably showcase the impact slightly better in a more quantifiable manner, rather than just, PowerPoints and photographs, right, which was a typical philanthropic model. Here, I think we have a lot of quantifiable data in terms of what is the impact being created, number of lives measured. And remember, because these are businesses, their own methodologies of measuring impact also much more sophisticated. So by showcasing this impact in a much more quantifiable manner, I think, definitely there will be a lot more possibility for people who are probably more traditionally oriented towards commercial investment to look at the impact sector. And I think lastly, the word patience has been used multiple times. I think this is a sector which requires some patience. So probably the traditional VC model, which seeks, high returns in a short period of time, needs to be revamped a little bit. I'm not saying it's wrong. It has served its purpose. It has created a lot of, unicorns out there. But I think for the impact sector, that model needs to be tweaked a little bit, because there is need for patience, right? I mean, if you take, say, a medical innovation, we recently approved one which detects breast cancer by just, analyzing a person's breath, okay? Now, you can imagine that this has a huge impact in a country like India, where you can do screening camps, just in a mass scale rather than bringing people to hospital. But to develop such an innovation to a stage where it's commercially viable will take at least 7 to 8 years. So that patience has to be built into the system. And then I think a lot more capital can come in and a lot more impact can be created.
Got it. Maybe, Meera, from your side, and then I have a special question for you, Saurabh.
So we are Habitat for Humanity is one of the organizations that went from a fully philanthropic model to even playing with this funds and supporting innovation, and it's been 5 years. It's going quite well, and I think we are at a point to look at more capital, right? So I completely agree that there is this need, and some organizations are listening, but each one has to learn their lesson and find the fit where it is, right? And I think there is also a need for a variety of capital, not just equity, because that may not be suitable in many of the cases for people to work with, right? So, and as Anand said, there's a bit of patience. And to me, the more important thing is if we can attract the right kind of founders to see the value in doing this and actually, right, bringing best innovations and not looking at it as, kind of attracting the more, to Anand's point, seeing this as a charity or right, some social good, but to say that it's like a technology for good, right, like, mass scale, then the best entrepreneurs come, the money will follow, right? I think there is enough money, just everyone's like, waiting and watching to see something exciting for them to get in.
Got it, got it. So Saurabh, and maybe I'd like you to have not the last word, but definitely one of the last words from you and then maybe Anand. See, one of the big issues that we see in this sector, notwithstanding its potential, is the bulk of the money that is coming is international, right? Even Anand, if you look at your own foundation, a lot of the money is international foundation money. Saurabh, a lot of the funds that Caspian has run, most of the investors are international DFIs or LPs. What is it that we can do, or what are the challenges? Why we are not able to get many of the domestic LPs, domestic HNIs, and other people to participate? Is there a cynicism that, this is all actually VC funding just disguised as some bhala karo kind of, do-goodery kind of thing? Is that the cynicism? Or is it a cynicism that making money and social impact just cannot come together? That is a question for you. Anand, the question for you is, you have a lot of corporate foundations. Let's say you talked about this health sector issue that you spoke about, this breast cancer, and why is it that large companies which are into imaging would not support something like this? If you are looking at new innovations, why can we not see big pharma coming into this? What are some of the challenges? And that's the last question. We have 3 minutes left. So Saurabh, maybe you can talk at a broader level as investors. And Anand, I'd like you to spend a little bit of time in terms of domestic organizations, especially in the corporate sector, coming in whether through CSR or through their innovation funding. What is it that can be done to encourage them more? Over to you, sir.
Yeah, that's a very good point, Ramraj. And let me split the answer into two parts. I think as Indians, we tend to have two kind of pockets in our mind. One pocket is for charity, which goes for charitable purposes, pure social work or religious work, etc. And then there's another pocket which is the mainstream pocket, which goes towards the investing side. And whether you are investing as an angel investor in a company or investing as an LP into a fund, depending on your priorities and your interests and abilities. I think what microfinance for the first time demonstrated that you can actually achieve both. You can actually get commercial returns with a bit of patience, maybe longer time horizons, but results which will be equal to a commercial returns while you are investing into an impact business. And I'm quite sure that we will see similar examples in another 4 to 5 years into the agri and the climate sector. Because folks who invested into microfinance really made decent returns. And the folks who are investing into agri or climate action today are going to make, of course, it's not like there will not be any failures, but if you are doing it well, then you are going to definitely make decent commercial returns. And there's nothing which succeeds like success. So in the end, when we are meeting here after maybe 3 or 4 years, and some of these successful stories are all there, and people who have missed it are also out there in the audience, then I think that is really the easiest way to convert people, in my view.
Let's see. Anand, from your side.
Yeah, I think firstly I would like to say, Ramraj, that the amount of domestic funding and domestic interest has increased significantly. So that's a very good trend, both from the CSR perspective and also from the government perspective. Both state and central governments have been tremendously supportive of impact-based startups. Multiple schemes are there, but it's still a drop in the ocean. I think primarily, if I look at from the kind of startup we support, which are early stage, we are relatively dependent on the CSR funding, which comes from, more from the philanthropic pocket of the large corporates. And I think the CSR needs a lot of tweaking to be more suitable for this sector. I think that is a fundamental problem, right? Today, what happens is if you have X amount of rupees to spend, then the preference is to spend that X amount on a project, right? So taking the same example of the breast cancer screening device, you can maybe buy 100 of those devices and distribute it in a grand function, and you have that 100 numbers to show. But if you put the same amount to supporting the startup might still take 3-4 years to grow. So at the end of year one, you might have 1 or 2 devices out there, but the startup is growing, right? But that difference is still not evident to the people who manage the CSR that, if I let this grow, then 4 years from now, I will be seeing 10,000 devices, not 100 devices.
It's not annual report friendly, basically.
Exactly. So that annual report mindset should be removed. I think that will really spur on domestic capital coming in. Yeah.
Great.
So,
I think,
sorry, one
please,
small
Meena.
point to
No,
announce
please,
on the
please.
CSR.
I'd like you to have the last word.
So even that is a helpful spend if that's what CSR is spending. We did have one in our portfolio, Modulus, which builds modular structures, which got a lot of CSR money to put up these structures. So it was like customer payments coming from CSR, which actually helped them grow, right? I mean, money is money for a startup, right? Even if it is for purchases.
Yeah.
But I agree that, all these require a lot more,
I would only like to say, Meera, money is money, but money for innovation has leverage, which can be very infinite. So, sometimes, when you push 10 new ideas, maybe 8 won't work, but the 2 which work can create an impact which is of infinite value, which, is be much more than what you lost in the 8. So I'd only like to exhort everybody that, you have to look at development capital from an innovation lens and not for an immediate short-term impact lens. So that's it, ladies and gentlemen. I think we are just a couple of minutes behind time. So I'll just kind of end the session here and urge all of you to sort of evaluate social impact and try to embed it. Some of you may be yourself startup entrepreneurs, but just figuring out how is it that you can try and make these your organizations more socially impactful. Are there segments of the market that you can address? And I can assure you those will be very large segments that can create social impact together with financial returns. Thank you very much, all of you, for your perspectives. I do hope this has provided you with a certain sense of an insight into this very new and emerging segment of social impact in the country. Thank you all for a patient hearing and for being here and encouraging us and, just with your physical presence and your attention to what we are saying here. Thank you all very much.